I can't lie, the crypto market is looking shaky at best. In today's video, I'll be discussing some of the most worrying signs that we need to pay attention to in this market. And of course, we'll be discussing whether or not Bitcoin could be tagging those lows once more. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. And as we normally do, kicking us off with some Bitcoin price action, you'll notice that the studio is a little bit different this time around. I am visiting some family over the holidays. Let's get right into it. So over the past few videos, I've been a little bit more bearish than most, even when Bitcoin went ahead and tagged this yearly open and this anchored VWAP, which is this orange line that you're seeing. We're still forming the same pattern. We cannot ignore this, but there are some more worrying signs in the market that I need to make you aware of. First and foremost, in terms of price action, what I'd be looking at here is for Bitcoin to, at the bare minimum, tag these lows right around $87,680, depending on which exchange you're looking at. Plus, we have these lows over here, which is also a clear liquidity grab if we can make it there. And then naturally, we can also talk about the lows right around $80,000. It would not surprise me if Bitcoin tags these regions. Now, I've been talking about this since Bitcoin was all the way up here, continuing to get rejected right at that yellow line, which is the yearly open. I've been talking about the yearly open time and time again, but guys, it is a crucial level to reclaim if we are to see more continuation to the upside. If you've been watching the channel as well, you know that I did enter a Bitcoin long right when we tagged those lows, and I secured some profits, but I would not be surprised to repeat myself if the rest of this position gets stopped out at break even. That's how you want to be trading this market. I will be looking for new long opportunities in this market, but at this point in time, if we start to get a little bit of a bounce from, for example, this liquidity zone, I would actually be targeting a new short in this market. It's very, very tricky price action to navigate, but what you need to understand is trade the market that is right in front of you. Just because you want Bitcoin to go up, it doesn't mean that it has to go up. Vice versa as well. Just because you want Bitcoin to go down, it doesn't mean that Bitcoin has to go down. Right now, this price action is most certainly chopping out a lot of traders. Now, in my previous video, we talked about the key liquidity zone that I was expecting Bitcoin to grab. That is all the way down here to right above $89,000. That is what we got. Right now on this Sunday, we managed to grab that liquidity. So what is next for Bitcoin? Well, to see bullish continuation, you really want to see more shorts piling into the market so we can grab that upside liquidity. However, with this most recent Bitcoin price action, a lot of people have been continuing to pile into longs. And this is exemplified on the Bitcoin exchange liquidation map. You can see that we are relatively even on the 30-day time frame. And so it would not surprise me if we continue to chop around, grabbing both sides of the liquidity before Bitcoin makes its next big move. As I said time and time again, I would not be surprised if these lows are tagged once more, but it might take time for that to occur. Can we potentially have a Santa rally, which a lot of crypto influencers have been talking about? Yes, it is a possibility, but not without tagging some downside liquidity. I think it's highly unlikely that we don't at least grab some of these zones before potentially moving higher, but we'll have to assess what the price action gives us to see if we can even manage to get a more significant bounce. Now, there are some alarming signs in the market that we discussed in my previous video, but I thought I'd give you a little bit more of an update. And that is that we're likely going to see Japan hike their rates for the first time in 11 months in this upcoming week. And to give you a little bit more of an overview, this rate hike is set to happen on Friday the 19th, creating massive fear surrounding the yen carry trade. Now, we've talked about this previously on the channel, but I'll give you a little bit more of an update based on this post that we're seeing right here. Bitcoin dumped hard the last time that they hiked rates. You can see here that last time around, Bitcoin essentially dropped from around $68,000 down to $49K, and then we did resume our uptrend afterwards. So something for you to consider. And if you don't know what the yen carry trade is, let's just go over it. So for decades, the yen has been the #1 currency people would borrow and convert into other currencies and assets to arbitrage the low cost of borrowing yen. The carry trade is diminishing now as Japanese bond yields are rising rapidly, and the Bank of Japan will raise interest rates by another 25 basis points on the 19th. So why should we care? Trillions are sitting in risk assets and bonds because of this carry trade. What happens if the trade unwinds? If the Japanese rates go too high, more and more of this borrowed money needs to be paid back as the arbitrage shrinks. the borrowers would start selling off assets to repay the debt, and once they start doing this, a massive snowball effect occurs. But you know what they say, sellers create more sellers. What happens to Bitcoin? Well, we know that Bitcoin is extremely macro and liquidity driven. The last 3 times that the Bank of Japan hiked rates, Bitcoin's price did the following: a pretty severe dump, well over 20% each time. March of 2024, down 23%. July of 2024, down 27%. January of 2025, down 32%. Do you think that this time will be different? I highly doubt it. Something else that we can already see on this Sunday, open interest is skyrocketing as price dumps. Shorts are starting to ape into the market hard. But as I covered with the Bitcoin exchange liquidation map, you can see that there is still a significant amount of longs in this market. So it's something to be concerned about, simply because it's not like we have tons of upside short liquidity to be grabbed and that there's no more longs in the market. It's quite the contrary. We are relatively even here, and with this continued downwards pressure, guys, I'm sorry, I don't want to be max bearish here, but look at the trend. We are still very much down. So with this downwards pressure, and given the trend, it is highly likely that Bitcoin does go ahead and move a little bit lower from here, tagging these outlined liquidity zones. Right now, Bitcoin is sitting just below $89,000, but all you can really do is trade the market that's right in front of you. You can see here that I am still in my long, but as I said, I would not be surprised if it gets stopped out at break even, the rest of this position that is. I'm also in an Ondo short, and if you want to know my exact steps, what am I going to be doing next in this market in terms of trading, remember that you do have the first link in my description down below, which brings you to my free Telegram community. The only requirement is that you sign up with one of my affiliate exchange links and you start trading on there as you normally would with your own capital. This is a completely free group. I'm just sharing my own personal trades. Speaking of which, some of these exchanges do have some pretty fantastic promotions that I just want to take you through 30 seconds. First and foremost, with Bluffin, you can get up to $1,000 back over this holiday period. And so if you want to sign up, that's the second link in my description down below. But something that might be even more interesting to you crypto natives out there, the third link in my description down below brings you directly to Velto. Now, Velto is one of my go-to decentralized platforms. I really, really like it, and they have a fantastic promotion over the holiday period. They actually have lower fees compared to most centralized exchanges and some DEXs as well. You can see 0% maker and 0.02% taker. So if you are a pretty big trader and you don't necessarily like centralized exchanges, you want self-custody, well, Velto is your go-to. Remember, that's the third link in my description down below. Now, what is next here? I showed you the worrying signs. We have the Bank of Japan likely going to be hiking rates, and we also have the fact that Tom Lee came out saying that Bitmain is nearing ownership of roughly 4% of ETH's total supply. You might be asking, why is this bearish? Look, Tom Lee has been pushing the narrative of $70,000 or $60,000 Ethereum, whatever it may be, in the new year. Guys, that is absolutely ridiculous, and I need to remind you, this language is very, very important for you to understand. They do not expect the firm to sell. Do not expect. They're not saying they're never going to sell. They're saying that they do not expect to sell. And now we're also seeing some price predictions that I talked about in some of my previous videos saying Bitcoin may do this into the new year. Guys, be careful with the language here, because this does not guarantee that, for example, Ethereum is just going to absolutely soar or Bitcoin is just going to absolutely soar. The reality is, take a look at the charts. The charts come first. And the real thing that we need to consider here is that we are still very much in a downtrend. I will be actively trading the market in front of me, trying to make as much profits as possible on the way down and on the bounces up, going into the bear market, and I will be accumulating as much Bitcoin as possible near those bear market lows. That has been my strategy that I've been sharing on the channel over the past few months. Now, if you want to know exactly how I'm doing this, reminder, it's the first link in my description down below. But the key thing that you need to consider is that you should just be trading the market that is right in front of you. A reminder as well, I am not a financial advisor. I have a pretty big disclaimer in the description down below. I'm just a guy on the internet sharing his own crypto insights and, of course, his most recent trades. And the last thing I want you to consider, yes, we will likely be having a new Fed chair going into the new year as per Trump's request, and he really wants that Fed chair to cut rates. The only question that we need to ask ourselves is it wise to do so when more than 50% of US adults say inflation is outpacing their income? Inflation is actually slowly rising. And so if you start cutting rates and inflation is increasing, well, then we have to start talking about stagflation, which is a major, major concern for the markets. And that sums up today's quick video. Guys, I do not want to be a bear. I'm just sharing with you what I think could be happening in the market, and there are indeed some worrying signs. You just need to trade the market that is right in front of you. When we get this kind of information, it is important to not ignore it and also not ignore the trend that we are currently in, which is a downtrend. I would most certainly not be surprised if the rest of my Bitcoin long gets stopped out at break even after I manage to secure some profits. That's how you should be trading this market. Take some profits and let the rest of your position ride, because no one truly knows what could be happening next. I hope you're all having a lovely weekend. I have my bluff and leverage trading tutorial right here, and I'll see you in tomorrow's video.